Ladies and gentlemen, good day and welcome to the Max India Limited Q4 FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajat Mehta. Thank you and over to you, sir.
Yeah, thank you very much. So namaste and good evening to everybody who has joined us on the call. Thank you for your time. On behalf of Max India Limited, a warm welcome to you on the Q4 and FY22 earnings call. For the benefit of the audience who are joining us for the first time, let me introduce my colleagues who are with me. Ajay Agarwal, who is our Chief Financial Officer for Antara Senior Care. Ojasvi Ghoshal, who is the CFO for Antara Assisted Care Services, and Ishan Bammi, who is the Chief Operating Officer for Antara Assisted Care Services, and Nishant Kumar from Corporate Investments also with us. A quick update. I'm sure all of you are eager to know what's happening on the capital reduction scheme. And I must say, despite our best efforts, we have not been able to procure a date from NCLT. I believe from a lawyer, the feedback we have is they are preoccupied with IBC matters. Therefore, the date of hearing has been shifting. From our side, I can reiterate, there is absolutely no change in our commitment to do the capital reduction. We have kept all the back end ready. So as soon as the NCLT gives an order, we will roll the process out for capital reduction. We're just waiting for the hearing to take place. A quick overview of the company and just a preamble. As you know, Max has had the knack of spotting opportunities quite early in the last 3 decades or so. The life insurance opportunity was spotted in 2000, the healthcare in 2002, and both the companies today, are quite large. Max Life itself is about 40,000 crores, market valuation, and 36,000 crores for Max Healthcare, while it's not part of a portfolio. So I think this competency of spotting the opportunity continues. So we spotted the senior care opportunity in 2010, and since then we've been working hard on making sure we are able to carve a niche out of it. And based on our learnings, we have also now expanded our operations. Also, I must say, the last 2 years, the kind of movement I have personally seen in the senior care space is quite rapid from all perspectives. Investor interest, new investments, new startups in different formats, whether it's assisted living, senior living, or health tech-based, innovations for elder care. A lot of attention from the government, the Ministry of Social Justice setting up 7 committees, launching an elder care helpline along with Tata Trust, launching a portal for re-employment of senior citizens who are able, launching an initiative to fund 1 crore per startup for all companies doing innovations for elder care, and the Niti Aayog under Dr. Vinod Paul also releasing a paper on what needs to be given attention to in the elder care space. So a lot of movement in this space. It continues to be a $10 to $15 billion market, with value pools around residences for seniors, assisted living, and medical equipment. And Antara is quite uniquely placed because of its lineage and its heritage from Max. We understand the healthcare space, we understand life and health insurance, and we also understand hospitality and infrastructure. And therefore, we are able to bring all this together to aspire to create an integrated ecosystem for seniors. So whatever healthcare, lifestyle, life care needs seniors will have at different stages of their life, we are able to stitch together a solution for them. This is quite unique. Nobody in the market is attempting this. Everybody is playing part of the value chain. We're the only ones looking at the integrated ecosystem, which also gives us an opportunity to have multiple engagement points with the customers, therefore bringing down our customer acquisition costs. All the macro factors in India have only, given further tailwinds to the sector, whether it is the increase, in life expectancy, the aging population, from 8% of the population to about 20% in the next 2 or 3 decades. Unfortunately, disease burden. So more and more seniors are now reporting cardiac issues. 17% are reporting dementia issues. 40% have vision issues. So I think all these factors are also providing the necessary tailwinds for the sector. Antara is, I'll just reiterate a few facts about our strategy. We are focused on 4 million customers, an income segment of rupees 1.5 million per annum and above in 3 clusters in North, West, and South. Currently, our operations are in NCR, but we are looking at both South, which is Bangalore, Hyderabad, Chennai, and Mumbai and Pune clusters as well in the next 12 to 18 months. And the value pools we are focusing on are residences for seniors. Now, these are meant for seniors who are independent but want to live in a community of like-minded people with safety and security and primary healthcare services. Also assisted living. Assisted living is meant for 3 kinds of people. Either seniors who can't be maintained at home because of age-related issues in terms of mobility, feeding, bathing, monitoring, medication, or have gone through an intense medical episode and need some recuperation and rehabilitation. Could be a bypass surgery, could be a transplant, could be a stroke, or seniors who come from outside India or outside the city where we have operations and need to stay pre and post surgery in a safe and secure environment. That's for what we call as care homes, is more popularly called assisted living outside India. The third vertical is care at home services that seniors require in the convenience and in the environment of their home, whether it is physiotherapy, diagnostics, critical care, end-of-life care, palliative care. All the services we are able to provide in the convenience of their home. And the last vertical we are focused on is what we call as patient aids. These are basically aids that seniors require to aid their recovery. Could be orthotic aids, like supports for back, knee, ankle, neck, elbow, or could be respiratory aids, could be bathroom accessories, could be wheelchairs, could be walkers, etc. So that brings the entire system together. We started our journey way back in 2013 with our first community in Dehradun, where we bought the land, we constructed ourselves, we sold it ourselves, we operate the community. As we speak today, gives me great pleasure to announce that 91% of the inventory has already been sold. So of the 197, about 179 units have been sold. The community is vibrant and buzzing with 125 people staying there. Till date, we have collected about 510 crores as of March 22. And this segment achieved a monthly sales velocity of about 3.3 units and a monthly sales collection of 8 crores in Q4 FY22. Our resident satisfaction scores are quite high, always 90% plus, which is a great vindication of the services that we offer. And the other silver lining is that 50% of sales are coming through resident referrals, which is reflective of both the brand and the quality of services that we provide to residents. The pandemic, in fact, has accentuated the need for such safe and secure, abodes for senior citizens. So based on our learnings from Dehradun, we launched the second community in 2020 in Noida. This is sector 150, which is a sports sector. 84% is green, only 16% is supposed to be constructed, and a golf, course runs through our, through our community. For this, we collaborated with a developer for land, and we had an SPV which took the debt for construction. Our role is in helping design the facilities, do the construction, sell and then operate it eventually. At this point of time, since launch, we've already sold about 73% of the phase 1 inventory. In phase 1, we have about 330 units. 73-74% are already sold. The sector also has very marquee players like Tata, ATS, and Godrej, in the same sector. In terms of construction, they're quite on time, having completed the raft foundation, the piling work, the basement, ground floor roof slab for all the 3 towers, R1, R2, and R3. The construction is expected to finish, by Q1 of 2025. We've already sold about 249 units, as I said earlier, and collected about 82 crores till March 22, and a monthly sales velocity of 12 and a collection of rupees 5 crores in Q4 of 22. The other advantage we have in Noida is that selectively we have been able to increase the prices and demand a premium over normal residences every year, which will help us, procure a healthy IRR and to some extent also mitigate the current impact, of the rise in construction costs. The second bet that we took was on assisted living. We launched, two homes in 2020, one in June and one in December. So currently, in FY22, we have served about 6,400 patients. We have launched 2 care homes with a bed capacity of 70 to 90 beds, including 10 beds for memory care. We've launched about 16 products and service lines in care at home and managed about 1,100 SKUs for the medical equipment business. For the care homes, currently we are the largest provider in NCR. And we've also launched a variant. So Gurgaon and GK2 were earlier full service care homes where all the services operated by us, the capex spent by us, and we launched a lighter version as well, which we call in our old parlance an operator model, which is near the hospitals in Vedanta and Apollo, in Gurgaon and Delhi. We also launched a very unique offering of a first mobile health checkup van for elders. It's a van which is fully fitted out. It has X-ray, TMT, doctor consult, ECG, blood work. All can be done in the van, so the senior does not have to travel to any hospital for doing a regular, health checkup. On the medical equipment side, all the fundamentals are in place. Warehousing, inventory, procurement, logistics, everything is in place. All our processes, clinical, non-clinical, are in place. Very happy to report we are the youngest organization to receive a QAI certification for our care at home services. This is somewhere similar to what NABS does for hospitals. QAI does for care at home services. Again, a vindication of the strong processes that we have put in place. And therefore, our customer satisfaction scores across these 3 new verticals have been consistently, upwards of 85%. Quick highlights of our consolidated performance for Q4 and FY22. The company's revenue grew by 44% from rupees 35.8 crores in Q4 FY21 to 51.5 crores in Q4 FY22. The EBITDA loss reduced from about 9.5 crores in Q4 21 to 1.5 crores in Q4 22. And looking at the full year performance, our revenues increased by 83% from 129.6 crores in FY21 to 237.4 crores in FY22. And the EBITDA loss reduced from 29 crores to a very small number of about 70 lakhs in FY22. Our PAT loss also reduced by 66% from 53.1 crores to 18 crores in FY22. And the decline in the losses was primarily due to the higher sales collection and the lower finance cost in Dehradun. Again, the numbers are great vindication of the path we have chosen, the sector we have spotted, the opportunities we are pursuing. The company continues to maintain a very healthy and robust balance sheet with consolidated net worth of rupees 637 crores and well capitalized with 570 crores of assets, a treasury corpus of 409 and other monetizable assets of 160 crores to support both the capital reduction and Antara's growth plans. In terms of the assisted care segmental performance, the care home net revenue was nearly 5 times on a year-on-year basis to rupees 4.4 crores in FY22. And this is primarily attributable to the improvement in occupancy in Gurgaon care home, which achieved a break-even within 20 months. If you recall, we had said a few quarters earlier that the care homes will break even within 2 years. The Gurgaon care home has now indeed, broken even. In March 22 at 45% occupancy because we have managed to optimize cost. The average occupancy improved from 10% in FY21 to 24% in FY22. In Q4, the average occupancy improved from 12% to 28%. The care at home net revenue has risen by 3.4 times year-on-year basis to rupees 8.8 crores. And the Medcare home net revenue has risen by 4.2 times to about 3.2 crores in FY22. Just to summarize, our endeavor is to achieve higher growth by a sharp focus on all the 4 verticals. We have outlined a 5-year vision that we are planning to invest 300 crores across these verticals. We have enough liquidity in our balance sheet to be able to fund the growth. And going forward on the residency side, we want to develop a 3-pronged strategy for enter, expand, and excel. We are looking at Gurgaon as a geography. We're also looking at the south, for residences for seniors. And the care home segment, we are now focused on increasing, our footprint and number of beds in NCR in the next 6 months. And care at home is to deepen the product offerings. On the Medcare side, we have had some experience and we are exploring, in terms of SKUs and sourcing, so that we're able to increase, our margins. We aspire to be a multi-location company in the next 5 to 6 years with 5 to 7 or 8 communities of residences, about 2,000 beds in care homes stroke memory care home, and a very robust care at home and Antara Medcare or medical equipment business, thereby achieving the revenue of 400 to 500 crores as we had outlined, many quarters back. So I'll stop here. Any questions, more than welcome.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question on the audio bridge, we request you to please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Nisha Desai from Raga Securities. Please go ahead. Nisha Desai, your line is unmuted. Please go ahead with your question.
Hello. Yeah.
Yes, Nisha, please go ahead.
Yeah, good afternoon, sir. Thank you for taking my questions. So I would like to ask that. Okay, 1 second, sir. Hello. Yeah.
Yeah.
So what is the business model in the Medcare segment, and is it only sold online or is it omni-channel also?
Yeah. Currently, it's an omni-channel business. We are doing it through our website, not yet through listing on any platform. We also have an offline sales force. It's both a sale and rental model. On rental model, obviously, the margins are quite high. So at this point of time, we are focused on omni-channel, approach. We are evaluating a few other approaches, but that's too early for me to comment.
Okay, sir. Sir, and my next question is, what is our outlook in terms of revenue and profitability over the next 3 years?
As I said, for the entire Antara Assisted Care Services, for the next 3 to 5 years, we are looking at a revenue of 400 to 500 crores across the 4 verticals.
Okay, sir. Okay.
Across the 3 verticals, the Antara Senior Living is a different, vertical where it operates in terms of financials very differently. So this revenue I'm talking about the 3 new verticals.
Okay.
Hi, this is Ajay. The Antara senior vertical in a 3 to 5 year time frame would give approximately 250 to 260 crores of revenue. So that gets summed up in this consolidated level.
Okay, sir. Okay. Thank you.
Fine.
Thank you. The next question is from the line of Anjana Shah from Shah Investments. Please go ahead.
Thank you very much for this opportunity, sir. So my first question is relating to our assisted care services. So, sir, in this business, what segment, what will be the main revenue driver in coming years?
So I said there are 3 verticals in this. There is the main revenue is going to be care homes,
Right.
which is what is called assisted living outside India. This has 3 variants. There are long stay, short stay, and memory care. Right. This will be the biggest driver, and the next driver will be, the care at home services and the medical equipment.
Right. Sure. So another question was, can we expect like around 100% sales to be achieved at the Dehradun project by Q1 FY23? Also, can we expect sale of all units at Noida in FY23?
Well, hopefully, in the next few months, we should be able to, sell 100%.
Okay. But sir, if you see, our revenues in Noida Care Home basically declined in Q4 FY22. So could you explain why? What is the reason for the decline?
In Noida Care Home, we
Care at home. No, care at home revenues.
Yeah.
So the care at home revenues in Q4 FY22 against last year on YOY basis.
No.
If you could explain the reason.
Sorry, couldn't get your question. Is it about care at home or care homes?
No, it is about care at home.
Okay. Care at home, Q4 21 was 1.19 crores and Q4 22 is 1.25 crores. So approximately 5% increase year-on-year basis.
Okay. Sure, sir. Thank you.
Thank you. Reminder to all the participants, to ask a question, you may please press star and one on your touchtone telephone. The next question is from the line of Anant Mandra from My Temple Capital Advisors. Please go ahead.
Hello. Yeah, thank you for the opportunity. Sir, I just wanted to understand, we have around 6 subsidiaries and 2 joint ventures. So just want to understand what is the business carried out through each of these subsidiaries and JVs?
I like to answer it. So 6 subsidiaries, actually you're seeing it from a overall year perspective, because a lot of subsidiaries are now basically non-operational. For example, Max Skill First, and there's one other company. So main subsidiaries for Max India is 2, which is Antara Senior Living Limited and Antara Assisted Senior Living Limited. Antara Assisted Care Services Limited. Antara Assisted Care Services takes care of the 3 verticals what Rajat sir mentioned, which is the care homes, care at homes, and medcare. And we intend to grow all our assisted services activity in this company. Other companies, Antara Senior Living Limited, which will focus completely on residences for seniors. The Dehradun property what we developed required a SPV which was registered at Dehradun, and that is the reason why we had to create another step-down subsidiary of Antara Senior, which is Antara Purukul Senior Living Limited. Post the Dehradun completion, we don't intend to have any more businesses in that company, and that will run in an autopilot mode for the operations of Dehradun. So these are the 3 main entities which are going to remain under the flagship of Max India.
Okay, and what about the JVs? There are a couple of JVs as well.
There are only one JV presently, which is Content Builders Private Limited, wherein we are developing the Noida project. As explained by Rajat sir, we are into a partnership with a landowning company, and that license is in Content Builders, and that is the reason we have to go into a JV format. Going forward, the entire strategy is that we'll be doing separate JVs for separate projects, wherein we'll bring in our know-how partnership and they will bring their construction capabilities and land.
Okay. All right. And with regards to the Noida project, so we've done most of our bookings have happened front end. However, most of the construction is yet to happen. However, construction costs have really escalated now. So earlier we were estimating that our IRR in the project would be around 18 to 20%. So do we still hold on to that, or given the increase in commodity costs, that we might have to revise those numbers?
So IRR, what we expected from Noida project, the conception was approximately 18%, and we aspired that with the price increase in sales, we'll be able to achieve 20%. Unfortunately, we have seen unprecedented increase in the commodity cost. But still, by the price increase in the remaining units for phase 1 and the balance unit in phase 2, we feel that we'll be able to contain our IRR to 17 range, kind of, plus minus a few percentage.
Okay.
So not a very remarkable difference, but yes, there is a stiff challenge on the IRR because of this increase in construction cost.
Okay. And in the Noida project, we are also looking after the construction, right? But in future, our strategy is not to look after the construction.
Correct.
Okay. And what is there any, I remember a couple of calls back, we were planning to close some project in Gurgaon for the residences for seniors segment. I mean, is there any update? Like, what's the pipeline like in the residences for senior segment?
We're very close to signing the MOU for Gurgaon now, and already spotted opportunities in one city in the south. In the next, few months, that MOU also will be in place.
Okay, that is very good. Thank you. And so one last question: what kind of recurring revenue can we expect from the Dehradun project? Because I think the clubhouse is still owned by us. So and the same thing is going to happen, I guess, with Noida and the other properties that we develop as well. So what kind of, is there some model that we can develop around what kind of recurring revenue that we can expect?
So in Dehradun, about 12 to 15 crores, in that range, depending on what is the consumption of services, in that range. Noida, too early for us to comment, but should be.
Phase 1 should get approximately around 7 to 9 crores.
7 to 9 crores in phase 1, and a little smaller number in phase 2.
But typically, we are going to work on a profit margin of 15 to 20% as a stakeholder interest. That would be the ballpark number, irrespective of what the revenues would be.
Okay. And sir, is the Antara brand owned by Max India?
Yes, very much.
It's owned by. Okay. All right. Okay, that's it from my end. Thank you so much.
Okay.
Thank you. Reminder to the participants: to ask a question, you may please press star and 1 on your touchtone telephone. The next question is from the line of Viresh Sangwan, an individual investor. Please go ahead.
Hi, thanks for the opportunity. Few of my queries have been answered. Just interested in knowing, so once the property for the senior living, once the property gets operationalized, fully sold, so what are the revenue streams, like clubhouse I can think of, or maybe some maintenance cost? So one, for a tenant who is living independently, and when that person becomes when he needs a medical assistance, so what are the revenue streams there?
Yeah, there are 4 or 5 revenue streams. So one is regular, maintenance that let's keep aside. That's for the infrastructure. There is a healthcare revenue stream. There is a cuisine, revenue stream. There is a usage of wellness areas revenue stream, right? And there is a usage of housekeeping and laundry services revenue stream. So there are 4 or 5 revenue streams, that come through. The largest, obviously, being healthcare as a senior's age.
Okay. And
So numbers the numbers we quoted earlier, let's say for Dehradun, the 12 to 15 crores represents these 4 or 5 revenue streams.
Okay, got it. And I heard about the Gurgaon. Any plans in near Chandigarh area in the north?
Not as yet. After Gurgaon, our focus is south and west clusters. After that, perhaps, Chandigarh might come.
Okay. And my last question is on the medical equipment side. So are we the original manufacturers, or we get it manufactured from somebody else and just label it under our brand? And then
currently we are trading, and sometime this year we will start sourcing and white labeling.
Okay. Thanks for that.
Okay.
Thank you. The next question is from the line of Ankit Agarwal from ARC Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, I have a couple of questions here. So the first one being, why is contribution margin on the lower end in care at home business, and how do we see this going forward?
So yes, the contribution margin is under pressure on care at home because we've had COVID-related disruptions. Plus, there are most hospitals wanting to venture into that business. So that is something we are watching. I think our focus is to look at the high margin contributors, which is critical care, physiotherapy, and diagnostics. So our focus is shifting towards those 3 to be able to increase the contribution margin. While we'll provide caregivers and nurses as a completion of service, we'll focus on the 3 biggest drivers of margin on this side.
Okay, yeah, sir. So one more thing. So how many care homes and memory care homes do you plan to open, say, over the next 2 years? And as you mentioned, you're targeting the south and west regions. So are those the regions where you will try to open these extra homes?
Everywhere, actually, as I said, we already have about 90 beds in NCR. We'll go up to about 225 in the next few months. And then over the next 3 to 5 years, we want to open about 2,000 beds of care homes and memory care in NCR, in the western cluster and the southern cluster.
Okay, fine. And so one last question on the medical segment. See, the revenues have dropped by like around 14% if you see this quarter on a YOY basis, and also sequentially they have dropped by around 38%. So any specific reason for the same?
On Medicare, you mean?
Yes.
Yeah. So on that, there was an acquisition we had planned that fell through sometime in October 21. And we had to then regroup and figure out our strategy. That took a while. So there's been a transition that we have done. Then we took time to set up our own backend capabilities of rental, warehousing, inventory, etc. So that's the reason you are seeing a drop. But soon, the next few quarters, you will see a recovery on this side.
Okay. Fine. So that answers all my questions. Best of luck for the future.
Thank you.
Thank you. Reminder to the participants to ask a question. You may please press star and 1 on your touchtone telephone. The next question is from the line of Manan Mehta from Mehta Securities. Please go ahead.
Thanks for the opportunity, sir. I have a couple of questions. The first one is at the Noida project. So what is the cost of an apartment and how much percentage of price hike would we do every year?
So the cost of the apartment varies between 1.25 to 2 crores depending on the size that you choose. And we normally do price increases twice a year in the range of about 5%. We're exploring a little more this year to be able to overcome the challenge of the phenomenal increase in the commodity prices.
Okay, so again there would be 2 price increases, but it will be more than 5%.
Can't comment. It could be more than 2 and could be more than 5.
Sure. Okay. And in the second question is, in the investor release, so we have seen the launch of 2 care homes under the operator model. So can you please elaborate on that model, sir, if possible? And how has been the occupancy trend? And if possible, when can Max achieve break even?
Yeah. So basically, in the care homes, the first 2 that we built in Gurgaon and GK2 are full service meaning that we taken the entire property on rent, spend about 6 to 7 lakhs a room in terms of capex. The average realization is about 4,000 to 5,000 rupees, per room per day, and all the services are being operated by us. Whether it is medical services, engagement services, cuisine, housekeeping, etc. The operator model is primarily meant for short stay. These are transitory care patients who need pre- and post-surgery stay. They are in the vicinity of the hospital. We start with about 10 rooms. The capex is quite light. It's 1 lakh a room. And the average realization is between 2,000 to 2,500 per room per day. Right? That's the essential difference. There, we provide all the medical services. The customer experience is ours. However, the operator of the entire facility gives us the F&B as well as the housekeeping services. Right? In terms of occupancy trends, it's there in the investor deck. It's been a consistent growth over the last few quarters. I already read out the numbers. I'll repeat them again. Just give me a minute. So in FY22, the occupancy was 24% compared to 10% in FY21. In Q4 FY22, it improved from 12% in the same period, FY21, 28%. So that's been the occupancy trend. In Gurgaon, as I said, we already broken even. So at 45% occupancy, the center has already broken even.
Got it. Thank you, sir. I'll get back in the queue for more questions. Thank you.
Okay.
Thank you. Reminder to the participants to ask a question. You may please press star and 1 on your touchtone telephone. The next question is from the line of Raj Joshi from A Securities. Please go ahead.
Hello. Thank you, sir, for the opportunity. Sir, I have a couple of questions. So the first one is the residents for the senior segment contribute majorly to the overall revenue as compared to the assisted care services. Can you throw some light on the revenue mix of this business?
Well, the residences for seniors is a very different business where the collections are based on the price of the apartment. It's an outright sale and the collection trajectory. So that frankly is an apple to oranges comparison, right?
We have just to give a ballpark, the revenue from residences is 187 crores as compared to Antara assisted care of 17 crores. But I again reiterate what Rajat sir said; those are completely different numbers. Antara assisted care is a growing company, just started, and we have an aspiration to bring it to X crores level in 3 or 5 years. While Antara senior, the revenue is now coming because we have been able to sell the completed construction. So that will be a very cyclic kind of a turnover. For example, my Noida project is not giving me presently the possession income. That will come in 25. So both are not apple to apple comparison.
Okay. So how is the competitive intensity in the residence for seniors and assisted care business? Who are the major players in the residence for the senior segment?
In residence for seniors, there are several people, but on different formats. So Ashiana is more affordable housing, and that's in the north and west and south. In south, you have Columbia Pacific Holdings. You also have Primus Mantri, right? Those are some of the few competitors on the residences. On assisted living, it's a very fragmented, market still. People are doing 1 home or 2 homes or 3 homes at best. So you have Golden Estate in the north. You have Epoch Memory Care in the north. We have Kovai Care in Coimbatore, Atashri in Pune. We have Atulya, in Chennai. But again, all these are very small operators with 1 or 2 care homes only. There's nobody playing the game at scale.
Okay. So then in terms of market share, where does Max India stand?
Well, difficult to comment. As I said, it's a very fragmented market. There's nothing that is reported for me to comment on that. The only thing I can say is Antara is the only player doing the integrated ecosystem of all the verticals. Nobody else is doing it. And we are planning to do it at scale, which is not what others are doing at this point of time.
Okay, sure, sir. And sir, my last question is, what is the Antara's USP in the business model as compared to its peers?
So 2 or 3. One, we certainly have an early mover advantage. Build a reasonable brand in the senior care space. B, we are able to combine our lineage and competencies of healthcare, infrastructure, hospitality to be able to bring together both lifestyle and life care offerings for seniors, and therefore I keep on talking about the integrated ecosystem. Whatever needs seniors have, we are able to provide. That's the second. And third, as I said, is our culture, which has been a hallmark of the Max brand in terms of Seva Bhav and service excellence, which differentiates the large delivery, and therefore that is reflected in the very, very high customer satisfaction scores that we have both in Antara Senior Living and Antara Assisted Care Services.
Thank you, sir. That is from my side.
Okay.
Thank you. Participants, to ask a question, you may please press star and 1 on your touchtone telephone. The next question is from the line of Anant Pondra from My Temple Capital Advisors. Please go ahead.
Thank you for the opportunity again. So just wanted to understand what are we trying to exactly do through the Medicare vertical? Like what value are we adding in the entire ecosystem here? Can you please just elaborate on the business model of Medicare exactly?
Yeah. So the Antara Medcare is equipment on rent and for sale. This is meant to aid the recovery of seniors. So starting from mobility aids like wheelchairs, walker, walking stick, to orthotic supports, which is meant for knee, back, etc., to products for bathroom accessories, air mattresses, hospital beds, oximeters, oxygen concentrators, adult diapers. So all that seniors need, to lead a life of self-respect and dignity and to aid their recovery is what we are able to provide. The advantage that we have is since we have multiple touch points with the customer, they're able to cross-sell, and get synergies, and that is quite evident from the revenues that we are able to generate now at this point of time. So that's the medical equipment or a patient aids or Antara Medicare segment. The model is both for rental and sale. Currently we are trading, but we'll soon get into sourcing and white labeling to be able to improve our margins. It's an omni-channel approach. We have an online presence. We also have an offline sales force who are regularly in touch with these patients through digital, as well as through references from hospitals. We also have a store, in Delhi, a flagship store through which we sell these equipments. So that's the business model, and that's how it fits into our integrated ecosystem.
Okay, so the density of these Medicare stores would be lesser than the density of our care home centers, because then we can aggregate demand from 4-5 centers into one center, or how would that work?
Going forward, our ambition is to deepen our presence through digital. Therefore, we'll explore whether it's listing or through our own platform, and we will have flagship stores in each city that we enter to be able to signify our presence. The advantage also we have is that we have physical location in terms of care homes and residences. So in some sense, we already have physical points of presence where we can, put up kiosks to display these equipments.
Okay. All right. And so one final question. We have a land parcel in Greater Noida. How do we plan to utilize this land parcel?
That land parcel was meant to look at an integrated healthcare, provision for seniors from residences to assisted living, services. At this point of time, we are exploring what are the possibilities. So no plans are yet for development. Also, remember, this is a joint development agreement
with iCare.
With iCare. So we are yet to finalize plans for that.
Correct. So basically, what we decided in this is that since we are going with the phase 2 of Antara Noida, the project at Greater Noida should not cannibalize our own project. So our plan to develop in this would be post we launch phase 2, and by the time we are all exploring more how we can create some integrated facilities in this to make it a landmark project.
Or we'll also explore monetization.
Is there any capital that is invested in the Greater Noida land parcel? How much would that be?
3.50 crores have been invested as a deposit, because there are certain terms and conditions which are supposed to be met by Greater Noida authorities, which we are working on.
Okay, and I understand it's a joint venture, so the land is not in our name.
Yeah, land is not in our name, so that is the reason why a deposit model has been rooted to, because by this whole structure of the transfer, the charges, etc., there's a lot of tax leakage which happens, and to maintain that practically in all projects at Greater Noida, it's always the JV works which works.
Okay, and sorry, the JV partner is who again?
They are just landowner people. They are not in the development of any project. Yeah.
Okay, all right. And the plan here, when we got into a joint venture with them, was again that the construction will be looked after by us, or they'll be looking after the construction, and we'll be doing the designing and sales and marketing.
We'll be doing all the designing, sales, marketing. For construction, we'll be hiring a PMC and a construction company which will do the construction for both the people.
Okay. All right. Thank you.
Welcome.
Thank you. The next question is from the line of Viresh Sampan, an individual investor. Please go ahead.
Hi, one more question. What is the cross-sell opportunity between the senior living and the assisted care? And if it does exist, is it on a per call or per need basis, or is there some offering the way we have monthly maintenance, similarly kind of monthly some package, and maybe some doctor visit or some doctor visits might be free. So what's the opportunity there?
Yeah, there are 3 opportunities. One for people who stay in residences for seniors. They pay a monthly charge which covers them for access to primary healthcare services, which include access to a nurse, access to a doctor. That is included. That's one part. The second part is there are certain services that require on-call, which could be pathology, physiotherapy, any diagnostic service that they need, any specialist consult that they need, any pharmacy that we meet, that is on pay per use, model. Third is medical equipment, that the same seniors require sometimes, equipment for themselves. That's also, paid for. We are already seeing synergy. So in Dehradun, as the community has developed and people have aged, the healthcare needs have gone up, right? So when we start Noida, same thing will happen. Also in the care homes, there are patients who are staying with us, for more than a few months. We are seeing a consumption of exclusive nursing facility, physiotherapy, pathology, some equipment like air mattresses, hospital beds. So we're already seeing synergies play out. We had assumed a 10% cross-sell in the assisted living or the care homes, and currently we're getting about 22 to 25% cross-sell.
Okay. And these doctor visits that you're saying, so where do the doctors reside? They stay in, or maybe at least in the daytime, they stay in residences itself?
Yes. So the doctor in Dehradun is resident, is in the facility from morning till evening. So are the nurses and GDS and the caregivers.
Okay. And lastly, so are we also exploring opportunities in senior residences, but just on the operational front? Like if some big developer like Mahindra or somebody develop and everything, and then we as Antara manage all the things?
At this point of time, no, because the returns are quite small, both in percentage and absolute terms. So as I said, that a community of 250 units will perhaps yield 7 to 9 crores of annual operating income. Of that, it's a 20% margin at best. So it's quite small. Therefore, we are preferring to participate a little bit in equity, not too much, as we enter this segment in new cities. But that gives a very healthy IRR.
But just to add, once we are in a stable state, so as we aspire that we be 7 or 8 communities, at that time, we'll have a much better visibility to come full-fledged as a pure operator model also, and we can have an arm. But it's too early to say today.
Yep. Okay. Thanks.
Thank you. The next question is from the line of Rajesh Toshniwal, a retail investor. Please go ahead.
Good evening, all. Sir, I just would appreciate if there is an update on that capital reduction scheme which was proposed sometime in October 2020 and which is pending before NCLT since long. Sir, recently we saw that there were short dates in March and April and February, but now I believe there's a note in the accounts that the next date is somewhere around July. So when do we see closure to this matter, sir? Thank you.
Yeah, so we are equally, eager to close this matter from our side. As I said, all approvals from everybody else except NCLT were in place. The back end in terms of how to operationalize, etc., is also in place. We have requested the NCLT for a short date, but as I said, they are preoccupied with IBC matters and they prioritize those over this. They've gone now for their summer break and they come back only in June. We're still trying and requesting them to prepone the date from July because we're quite eager to conclude this matter. So at this point of time, unfortunately, just have to wait for NCLT. From our end, everything is ready.
But sir, we are seriously contemplating requesting our lawyers to seek an earlier date than 20th July, sir?
Absolutely. Absolutely.
And if, let's say, if we get the clearance as it ought to be, I mean, it's a routine matter, and the promoter is also not participating, it's for the benefit of public shareholders. So then when do we see closure? I mean, if we, let's say, by 30th of June, we have this order, hypothetically speaking. So when can a shareholder see money in his bank account, sir?
Within 35 to 45 days, post that.
Thereafter.
Yeah.
Thank you. Thank you very much, sir.
Thank you. The next question is from the line of Naisat Parikh from Nachin Capital. Please go ahead.
Hi. Thank you. My first question is, on medical tourism, are we seeing any uptick on that, both domestic and international, and what is the impact that we are seeing on our various care home facilities as a result?
Yeah. So that, that traffic has started back, now in the NCR at least. And the last 1 month, we've seen about 7 to 10 move-ins already from international patients. Please remember, our focus is on elders, and on long-stay patients. But we have seen in the last, 30 days, 7 to 10 move-ins of people who have come from, outside India.
Right. Got it. And the second question is just in terms of, the Noida phase 2, any timeline on when, if you can just provide any timeline of one completion of phase 1 and then the launch for phase 2, please.
So as I said earlier, the construction completion for phase 1 is targeted for, end of December 24 or early part of FY25. As far as phase 2 is concerned, we should in the next 10 to 12 months, start selling that post, of course, some of the approval that we have to procure. But we should start selling in the next 10 to 12 months, phase 2 as well.
Got it. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Rajat Mehta for his closing comments. Over to you, sir.
Yeah, thank you very much. Thank you very much to everybody for the questions. Happy to share all the details. I'll just like to reiterate 3 or 4 things. Antara has an early mover advantage in this very exciting space, which is evolving very fast. It's already a $10 to $15 billion market. We have built, a reasonable brand at this point of time. We have spotted the verticals which provide good opportunity, and healthy margins for future growth. Achieved reasonable traction so far. So we are well on our way of building an admirable and trusted brand to inspire, to improve and enrich the quality of life of seniors. We have enough liquidity to be able to support Antara's, growth plans. And we are quite unique and the only ones and the only branded player trying to create an integrated. So hopefully we should be able to create impact in the next 3 to 5 years. So thank you very much for your listening, for your questions, and see you next time.
Thank you very much, members of the management. Ladies and gentlemen, on behalf of Max India Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.